Hey, everybody, welcome back to another episode of the 6-5 podcast. I'm hosting today. Pat's driving. We are back. It is not Friday, and we are sorry. We'll be putting this live on a Tuesday morning. It was a long weekend. We figured everybody needed a little rest, and Pat and I have been super busy. If you don't know, June 7 and 9, the 6-5 Summit, we've been flying around the country and locked up in our studios recording sessions for you, because we want all of you to enjoy hearing from some of the greatest thinkers in the high-tech space. June 7 and 9, the65summit.com. Sign up. Wow, what a promotional introduction. But Pat, we're back, 6-5, big week. We got acquisitions, we got earnings, we got some events. But first of all, buddy, how are you and where are you?
Yeah, I'm doing great. Thanks for asking. So just to give you the degree of travel that I've been up to, I think in 2 weeks I visited 12 cities. And I did not add Austin in there. But, 3 things going on, right? We've got the summit coming up, which is exciting. I'm shipping kids across the country for internships. I'm bringing them home after graduating from college. And then I'm doing my day job. But no, I'm in a undisclosed location bunker in Portland, Oregon. So, and you know what? I think in the past 3 weeks, I've been here for 6 days, and it's rained every day. I got to tell you, it's refreshing. It was 97 in Austin yesterday, and I think we're going to hit a high of 51 degrees. But I'm just great to be here. I am happy to be here. I am great to be here
In Austin, in Oregon, or where? Where are you happy to be? Or on the pod?
I'm happy to be on the pod, buddy.
All right. I was hoping that was what you were going to say. I was going to say, never took you for an Oregon guy, although it's beautiful if you like 51 in the summer. But the weather here is hot. It was actually quite nice this morning. Those 70s when you wake up, which is pretty pleasant down here in Austin. But yeah, by mid-afternoon, you just walk outside and your skin starts to boil. It is hot right now. And, that's what I signed up for when I moved down here. But we got a lot to talk about this week, man. I mean, I think my travel has been not quite as bad as yours, but I'm up there. This week, we're going to meet again in Charlotte. We'll be catching up with Honeywell CEO Darius Adamczyk, getting ready for one of our big day opening keynotes. And then you and I are jetting around from there. I think I'm off to Raleigh. You're off to New York, right?
Yeah, I'm doing a keynote for Logic Monitor on observability. So
you're an observability guy, so it's good that you're out there. I can't wait to observe that. And so, it's busy times, but this week was busy. I know you and I both, you went on Tech Check this week on CNBC. I was on CNBC in Asia and 50 other things this week, talking mostly, if I'm not mistaken, about the VMware Broadcom deal. So we're going to bring that home today. So that's going to be our final topic, because I think we're going to have a lot to say. But it was a week packed full of earnings. Actually, some really good earnings from a number of companies. We have NVIDIA, Dell, Lenovo, and Marvell all had earnings. And then, there were some events that went on this week. ServiceNow had an event. We're not going to talk about that here, but Splunk also had earnings. So there's just some other companies we talk about somewhat regularly here on the show. But Microsoft had a big event, had its build event for developers. And I think that is where we should start. So, Pat, I'll start.
Let's do this.
And let you dig in.
Yeah, so like many other tech giants out there, Microsoft has had an event for developers for over a decade, and it's called Build. So essentially, anybody who is building for the Microsoft ecosystem shows up, and this time it was virtually, because they did not do it face-to-face, to hear what's the best from Microsoft. And Dan, I think we could have talked about 50 different things. So we're going to take one topic each. So what I wanted to talk about was a project called Volterra. And Volterra is an ARM developer kit for the Qualcomm Snapdragon compute platform. And it is actually a piece of hardware, and to me, it looks a little bit, interestingly enough, like an Apple TV. But this is to accelerate the ARM ecosystem. We saw a lot of acceleration for ARM in let's say from Apple, right? Their entire top to bottom MacBook lineup, and for that matter, iPhones and iPads are all based on the ARM architecture. Years ago, well, in fact, it's Microsoft has been doing it for a decade, not exactly the same level of success here as, let's say, Apple has done with the M1. But this time, I do believe that it's different. I mean, first off, what Microsoft has committed to is a top to bottom stack commitment, not only for the PC, but also for Azure. So whether it's application development environments, whether it's tuning tools, and everything in between, Microsoft is committed to this. One of the more interesting things that Microsoft talked about was the ability to leverage the ARM ecosystem for AI. And essentially, what that is, these are the hard-coded blocks on the Qualcomm Snapdragon processor, which, by the way, are twice the size as are on Apple's, to be able to do some really cool stuff. Let's say you and I are doing a Teams call or a Zoom call, and it's automatically giving us the ability where it makes it look like we're looking at the camera, even though we're not.
And I'm reading my phone.
Exactly. Yeah, you're triple tasking, doing different stuff like you like to do, but people don't actually know that you're doing it, right? The whole notion of crumpling up a chip bag, which, by the way, can be done on the network, but is done better at the endpoint. And I think we've learned more times than not, if you can do something at the endpoint, it's a lot more efficient because you don't have to send the data up and down to the public cloud over 4 or 5 hops with less than 20 milliseconds latency to do that. So pretty excited about this. This is a long-term commitment from Microsoft, and I do think that this is important. While the company did say that this was done in conjunction with Azure for cloud compute, I'm not entirely sure how that works, and I need to go off and do this. What I did appreciate, though, was the specificity on what they were looking for, which was this automatic framing. I talked about the consistent eye contact and the voice clarity. And I may have seen this performed in a lab somewhere, but I couldn't talk about it if I did. I do think there is magic when you do connect Azure to the endpoint, and this is a superpower that Apple doesn't have, right? Apple is not good in the cloud. In fact, they use a lot of Google Cloud to do what they have to do. So I'm just imagining a hard-coded endpoint operating system with very highly tuned APIs that operate on the client system and operate up in Azure. I think good things are going to happen. Specifics for the development environment. I mean, you're looking at a full version of Visual Studio 2022, VS Code, Visual C++, .NET 6, Java, .NET. Oh my gosh, Windows Terminal. Yay. Hopefully there's Notepad too in there. But you get the idea here. This was, this is a pretty big commitment, and this shouldn't be a surprise to anybody. But this connection with the developers is what Microsoft needs to make this a reality. The one other thing that final thing I'll say is they did extend the Amazon App Store to more companies than the US. So you can actually run Android apps, select Android apps on Windows 11, which I think is pretty cool, because when it comes to news applications and you want those, let's say, even basic notifications to be in one place, this is what I use it for. So cool stuff.
Yeah, there's a number of things, and you went pretty deep there. I'm going to go a little wide and quick through a couple of things that caught my attention. I think as we're seeing this ecosystem of developers continue to shape, we've got this multi-cloud future, which we're going to just be talking about so much. And when we talk about the whole VMware Broadcom, why that's so important is because why enterprises are trying to figure out this strategy. And one of the things that Microsoft seemed really focused on this at this year's build was about simplifying the migration and modernization on Azure. So it did announce a number of things for basically being able to group virtual machines and physical servers, which is going to be the future, enabling companies to sort of pause on and off to make migration simpler and be done during non-peak periods. They added a dev box for developers, and that's going to basically create more self-service cloud workstations, more pre-configured, more ready to code for the Azure development environment. They also, you mentioned, and I just wanted to point this out with this MAUI framework, basically giving developers more ability to build native apps across multiple OSs. And I think that's going to be incredibly important as we're seeing ARM grow in terms of, like you mentioned, but we've got Android, we've got Mac, we've got Windows. And the more these companies work to enable developers to develop once, deploy many times, that's going to be very important. So you mentioned some of the stuff about the collaborative experiences. I really like some of the stuff they're trying to do in Teams for hybrid workers. They have tools that are going to basically allow them to create apps, like for live sharing, for instance, where you can build apps for better annotation, editing, sharing content. This has got to be the future because, like I said, now we were 2 years into the pandemic. In the beginning, it was like, wow, we can do video, and now it's like, well, we need to get back in rooms together because it's just not enough. And I can see you nodding your head, and then. Finally, and this was probably the thing I wrote about most, which is the Power Platform. They had a number of features. Probably the thing that I liked the best was the redesign of Power Pages. It's got a new design studio that basically makes it extremely simple for non-coders to design and publish, websites. So they've integrated Power Pages with Visual Studio, with GitHub, with Azure DevOps. And so I continue to think low code, no code is going to be important, but this is a great practical example of how can we quickly get up a splash page or a group page or an intranet page for our teams, get it up, get it functional, get it working. Quality is there, but also you don't have to be a developer to build it. So, and that's been one of the big features of Build all the way along path, and this is that really the continuum of developers isn't really just about people who, code in Java and C# and .NET. It's about bringing the continuum of no code and low code over here, all the way to the continuum of that pro developer, and making sure we're maximizing all the resources. So good conference, lots of things announced, Pat, good coverage on Volterra. Let's jump into some earnings. We've got a little wave here. We'll talk first. I'll do the rundown on NVIDIA. So first and foremost, this was a really interesting earnings season. And so we had sort of that first wave of earnings. It was pretty good. We saw Microsoft really robust. TSMC was strong. We saw AMD crush it. And the only reason I'm pointing this out is everyone's kind of been wondering what's going to happen to a lot of these tech spaces. So my big prediction has been that enterprise tech, data center numbers are going to be good. And by the way, that's going to be somewhat thematic for the rest of this podcast, is that enterprise and data center are good. The question mark has been sort of what happens around more of those consumer, discretionary, gaming. There were some pundits that went on the air and wasn't us because it would have been a better assessment, but they came on the air and said that NVIDIA's gaming numbers were going to get crushed this quarter as, pricing had to come down as demand is coming down. And I do think some of the demand stuff is going to turn over. We heard about the whole thing with the, they got fined because there was a larger crypto customer base than what was necessarily being led on. But here's the long and the short. NVIDIA had a really good quarter. I mean, you look at the numbers and they beat, you had high volume growth, your earnings beat, you had revenue beat. You had, 8.5 billion versus 8.1. And by the way, this is a stock that's been beaten up 43% or so around the time that they had earnings. The company did see some operating expenses increase and lost $500 million due to the ongoing conflict in Ukraine and Russia. So that's pretty consequential right there. But Pat, like I said, we could talk about a lot of things here. Here's the thing: 83% annual growth in their data center business. So while gaming did slow a little bit, by the way, slowed to like 33%, still a good growth number. And by the way, it's $3.6 billion in that quarter. Data center has surpassed it this quarter at $3.75 billion and 83% growth. But as we saw with Micron, as we've seen with AMD, as we even saw with Intel, the data center numbers are extremely good and robust because companies are investing in cloud and data center architecture in a deflationary manner. And so I expect that will continue to be the case. Here's the caveat, and I'll turn it over to you to fill in the rest of what I didn't talk about here. Guidance was a little soft. And so they guided below expectations, and the street hates that right now. So even though this company is creating mega cash, has great customer, diversified business, I mean, even their ProViz business from the Omniverse stuff is hustling. So I'll let you talk about auto. No, I'm just kidding. No, but go ahead. I'll leave it there. Give you some stuff to munch on.
No, I appreciate that. And yeah, I mean, listen, the last part of my segment on CNBC, when I was talking about Broadcom, John Ford hit me up on NVIDIA. And, my statement, I'll reiterate that today. There was nothing that I saw from their earnings or even their forecast that gives me anything midterm that there's something wrong with either the markets that they're in that are big and growing or their competitive makeup in those. What people can't forget is that they also have a massive transition to their next architecture. They've been riding Ampere for over 18 months, and they're moving to a new one in the third calendar quarter, and that's super important. But yeah, gaming up 31% on an old architecture called Ampere. Data center 83%, like you said, which was really driven by hyperscale GPUs. ProViz 67%. You talked about the Omniverse. There's a lot of the growth in there that were notebook workstations. Again, old architecture. Auto did get hit. They were down 10%, and those are from cockpit declines that I don't know this for a fact, but based on all the Qualcomm wins in the cockpit, I have to believe that came at the expense of Qualcomm. They were down 52%, small part of their business on the other business. This was their specific crypto CMH cards, but again, a blip compared to gaming and data center from a size. Yeah, and their guide was lower, right? Yeah. China and Russia, right? $500 million. And then they said they were going to reduce hiring and make OpEx, I don't know, coincident with the revenue. The funny part here, though, is like, this is just such a dumb blip. I'm pretty sure that Colleen Kress, their CFO, threw that out there as some red meat just to make people happy. NVIDIA needs more people, right? When you're growing freaking 50% or 46%, the dumbest thing you could do is to cut massive amounts of people. They're not going to do that. So I think they threw that out there.
Well, maybe they've been hiring like crazy, but I think they're just going to wait a little bit for this period and some of the fallout, and then some talent's going to end up coming their way. I mean, I don't think they're going to slow down.
Make no mistake. If there is good tech talent, particularly in AI, they're not going to let that sit out there. They're not going to. This is Pat Moorhead talking, not NVIDIA, but this is just the reality of the situation. If you've ever worked in a mega growth company, it is crazy. Like, you just money whip people, you hire as many people as you possibly can just to keep up with the growth. And looking forward, we're going to go from the A100 to the H100. We're going to go to the GTX 4000, right? The best literally is yet to come for this company.
Yeah, I think we leave it at that. I think the crypto stuff, maybe now that crypto has been destroyed largely in many categories, people are maybe slowing down. Some people are going to have to go back to work. The stay-at-home miners, crypto miners are going to, can't afford to buy GPUs right now. They need to actually work jobs because every crypto you're buying isn't going up 10% when you dollar cost average and hodl all day long. So, you can only go so far with that. But I think largely the gaming stuff will be fine. And I think the data center stuff they really are in their own class there at this moment in time that don't have much competition. And we can talk more about that, but we've got to keep going. So let's go on here to Lenovo, Pat. Another one that's got a lot going on. I think showed some pretty good strength here. I'll let you take the first stab here.
Yeah, so Lenovo's really been on a roll. And if you think of them competitively, let's talk about them historically, is they have been primarily a hardware company. And for years, I wouldn't say they were letting Dell and HPE and Cisco really lean into software and services, but that's what happened, right? Dell, HPE, and Cisco really leaned into software and services as Lenovo kept cranking out the hardware. They made two very large acquisitions around the same time, right? Lenovo bought the x86 server operations of IBM, and they also bought the Motorola smartphone operations from Google. And net, they turned both that x86 server business and the money-losing Motorola business into profitable entities now. And what a machine. And then they added a new division in there called SSG Solutions and Services Group to put a fine point internally and externally on its next generation capabilities. And while the company wanted to spend a lot more time on its annual results, which were really good. And by the way, the company's now a $70 billion company. Amazing. Okay. $70 billion in revenue. It was kind of hard, I'll admit, it was kind of hard to squeeze out what the fourth quarter looked like because the company spent 90% of the time on annual. And I don't know if that's a Hong Kong company, Hong Kong stock market based company thing, but their revenue was light, Daniel, compared to what we've come to appreciate and expect, right? Their revenue was up 7%. Gross margin was coincident, going up 7% as well. But I got to tell you, somehow they cranked out incredible profit out of that. EBITDA up 37%, net income up 50%. Pretty freaking crazy. Services was the leader in terms of percentage growth at 28% and even more profitable. Infrastructure was down 12%. Kirk has done an amazing job turning that group around. On the year, they were profitable. For 2 straight quarters, they were profitable, but they got hit on a revenue side based on a lot of supply chain issues happening in China. Now, unlike some of their most direct competitors, Dell, HPE, and HP, they're very highly vertically integrated. Meaning they do their own PCBs, they do their own PCAs, they do their own chip shooting, and they do a lot of their final manufacturing, not dishing it off to ODM. So they literally are at the center of this, and I'm totally buying the supply chain issues that they had. So I'll finalize with devices, right, at 8% growth. We'll have to see what not as stronger percentage growth as Dell had, but we'll have to see how HP does.
Yeah, we'll keep our eye on that, and we'll be talking about Dell here in a few minutes. So we'll come back to that one. You covered a lot of it. I do think focus on the full year is the key, and I think that's a reason the company focused on the full year. Of course, you never want to see.
The growth was amazing on the year.
And I mean, you gotta commend, like in an era now where cash flow is what everybody is looking for from an investment standpoint. Being able to grow your EBITDA 37% and then grow your net income by 50%. Probably shouldn't go under the radar. It shouldn't slide under the radar. It should be probably something that gets pointed out. That infrastructure number, like I said, 12% down on the quarter, but I believe they did grow that business double digits, about 13% year over year.
Yeah.
And so when we do come back and talk about like Dell, for instance, you'll see that Dell had a great quarter this quarter, but that's, they're right in line on that full year basis. Lenovo's actually been quite steady, quite strong in that infrastructure space. What I like about the company has been not just the vertically integrated manufacturing that you mentioned, but is really the way they're working on creating more integration between device, between services, and between infrastructure. Really seem to have their fingers on the pulse. The SSG group seems to be really focused on, being able to capitalize on a number of secular trends. They're looking at consumption with TrueScale. They're looking at hybrid work. They're building a lot of key software partnerships with companies, like SAP, where a lot of workloads are being run on Lenovo servers. They're focused on managed services, support services, and they're also trying to build a more complete kind of digital workspace set of mix of services too, that are going to be sort of turnkeyed, almost at a consulting level in many ways, where you could see that becoming a real growth engine. That's only $5 billion year on year, but it's a 30% plus growth on the full year in that services area. I don't know about you, Pat, but I think we would agree. I like high margins. I like growth in services. I like that they're attaching to consumption. It feels like it's the right place to be, because in many ways, some of this stuff gets very commoditized. And so what I feel like the story is becoming with Lenovo is we're going to try to develop solutions, integrations that make us less commoditized, whether it's, to your point, the integration on manufacturing that takes out some of the supply chain risks, or it's the integration of hardware and software that adds value to their customers, so they're not just selling, x86 server boxes all day long, because we know where that's heading. So long and short, pretty good quarter. Congratulations to the team. It's another great result. So
yeah, Daniel, what I just, to put another fine point on SSG, imagine if you're a company. What do you do if you're a company and you're not known for something? What you do is you bury it until it becomes big enough to be important to you. Lenovo did the opposite. They're like, no, we're going to create an entirely new division that we're going to bring out and publicly talk about financially every quarter. And oh, by the way, it's going to be the first division we talk about, right? Not the last, not the middle, but the first one. And in a way, psychologically, that sends the message to employees and investors and customers that this is really important. So what a cool way to do that.
Material versus material, right? Like material, subjectively material versus numerically, material. And I think they're saying it's both.
Yeah, exactly. I mean, you look at that $62 billion IDG business and compare it to, what is it, a $5 billion business at the same level, right?
Right. And pretty soon that $5 billion might be creating more op inc. Just saying. I'm just saying. So, that's almost the size of Moor Insights. But hey, what can I say?
No, be fair. Moor Insights plus Futurum probably gets there. So
all right. Yeah, we're gonna hit that one. That'll be our 7th topic. We'll go through our numbers.
Exactly.
Never. So let's move on to the next one, Pat Marvell. Okay, so long and short here, Pat Marvell. Good. All right, let's move to the next one. No, I'm just kidding. Very, very good quarter. You and I were in San Jose, about 2 weeks ago?
Yeah.
I had a chance to sit down. Matt Murphy, CEO of Marvell, will be one of our day opening keynote speakers. Can't wait to share that with the world. But look, you and I really looked at Marvell and said, this is a company that needs to be at the top of our card. I mean, just absolutely crushing it in terms of understanding the opportunities in all the right markets, all the right areas. As it comes to the fact that, all this high-speed networking is going to need a home, and Marvell, between its partnerships in the cloud and its enterprise relationships, it's hitting data center, it's hitting cloud, it's hitting 5G, it's hitting automotive. It's really playing in all the right areas. We've talked endlessly on this podcast about the transformation of Marvell, so I'm not going to really spend a lot of time on that. But this quarter, again, it's like my head wants to explode, because everyone wants to say that tech is doing so bad, but I can't really find evidence of it except for some really poor management that's caused some numbers to be less than stellar. But you're talking about record revenue, 74% year-on-year growth. You're talking about operating margins up. You're talking about cloud growth, data center revenue, Pat, 131% growth, 44% of the total. Enterprise transformation growth, 5G growth, all over 50% growth. You're saying big revenues, big earnings, and the guide is still strong. 41% year-on-year guide growth for the next quarter, Pat. So, when I look at this, essentially you're seeing data infrastructure end markets is kind of how they refer to it now, representing 88% of their revenue. So the old pre-Matt Murphy Marvell and the consumer and the company that was struggling, and it's gone. The growth is there. The cloud growth, that number, Pat, I just got to say it one more time.
That's mind-boggling.
31% year on year in the data center, the cloud part of their business. So, and one more, the automotive Ethernet business, which is going to be critical. So all this technology we're talking about, and these bigger bombs in the vehicle, and we talk a lot about Qualcomm, we talk about Intel and Mobileye, we talk about NVIDIA, we talk about LiDAR companies like Luminar, but we don't necessarily think about the fact that automotive Ethernet is, this connective tissue that is going to be required. Pat, that business is also growing over 100% on a year-over-year basis. So I feel like I'm gushing a little bit, but I was kind of going through these numbers, and I'm trying to figure out, you talk about throwing red meat. I'm trying to throw some red meat to the wolves here. I can't really find what was wrong in this report. This is a company that just seems to be executing. It seems to be opportunistic. They seem to understand the continuum of, being the kind of in the backdoor company that's off the record, that's powering all these other front of market brands. But yet at the same time, their profile is rising. So they're becoming more known. They're being brought into more opportunities. There's a lot of companies in the cloud and in the big data, big enterprise that Marvell is embedded in that people don't know about, and that's intentional. But the companies, like I said, the brand halo continues to grow. So, even with NVIDIA, as good as their numbers were, at least, you could find that soft spot. Well, their guidance was weak. Well, there was really nothing weak in this one. So I'm going to go in a macro. I'm going to end this on a macro comment. This is just one more bit of evidence that in the market, that even as there's a contraction and when there's economic pullbacks, that great execution, being in the right spaces, having the right relationships, and building the right technology will almost always overcome a shortfall. And my example is always like this. If our unemployment rate goes from 3 to 6%, Pat, that still means 94% of people are working. And if our GDP shrinks and slows down a little bit, it still means 99% of the current buying is still happening. So sometimes I think we love economically to talk about the doom, but realistically, Marvell is a great example that in this current economy, valuations may be down, but this company's growing, earnings are growing, and I think in the long run, it's going to be in really good shape.
Wow, you sucked pretty much all of the oxygen.
I only talked for 3 minutes. It was only 3 minutes.
No, I know. You sucked. So I'm going to start a little bit differently.
I just sucked. How about that?
No, you didn't suck. It was really good, but no, you sucked a lot of the oxygen.
Go.
No, I mean, listen, let's talk big picture. So this isn't perfect because Matt Murphy's been in there almost 6 years, but this is the growth. And you have to ask yourself, well, why did this happen? It's called focus, right? Look at where it was in 2017. That's when Matt started. 62% consumer. Now it's 12% consumer, right? They jettisoned some business units out and they made some, 3 or 4 really big acquisitions. And you can see there black and white on the difference. And, this quarter, right, was a great indication of that. And here's one of my stellar tweets here. But it's funny, Daniel, you and I get excited about double digits, but how about triple digits? I mean, that auto and industrial was almost up, almost up 100%. Automobile Ethernet was up 100%. So, I looked, I do, you and I don't want to be shills, but there, we do, when we see something we like to talk about it and we like to point it out. I couldn't find a blemish in this, and that's it. That's all I have to say. I'm done.
I mean, the only blemish is, even despite all these great results, this has been beaten up just as much as most of the other strong names, down like a third, even after the comeback. So it's crazy. But I guess we're not, and by the way, not financial advice. I don't think I pointed that out enough in the beginning, but I'm going to say it again right now just to make sure I'm clear. This is info. This is entertainment. This is not financial advice, but looks like a good opportunity here. All right. So, all right, let's keep moving, Pat. Here's one that I'll give you a lot of oxygen, and if you leave me anything or not, I'll still find something. But let's talk about holy Nikes, Dell.
Man, I mean, Dell absolutely smoked it. I was talking to some of the folks at Dell about their earnings, and I kept asking, like, "Are you sure? Like, did I hear this correctly?" I mean, literally records everywhere. I mean, gigantic beat on the bottom, a really big beat on the top. And remember, everybody was expecting something like happened to Cisco, right? Because there's no other company that's been this close that has brought out their earnings yet. I mean, obviously Lenovo, right? And Lenovo, they were negative on growth in the data center, and then smaller number, single digit on client, and overall revenue up 16%, EPS up 36%, infrastructure 16%, server and networking up 22%. Are you kidding me? I mean, that thing has had a little bit of growth, and then storage that has had zero growth over the last 4 quarters, up 9%. PCs up 17%, and this was after Lenovo brought out a 7% gain. And it's all, it's funny. China and Russia, nah. not even a super big discussion on the guide. And there, I'm gonna leave the rest for you, big guy.
Well, there is a ton there, but again, it's the anomaly to me is so weird, because if you sit down, you tune in to Bloomberg, CNBC, you listen to the pundits come on the air, and you're like, sometimes that's us, by the way. But, the ones that aren't necessarily tech, they're spreadsheet readers, and they're looking at macro data, and they're looking at companies, and they're pulling back growth. And this is where I guess there's this divergence or decoupling between technology and its impact in markets and the actual ability to perform. Yeah. Dell has been, by the way, an absolute juggernaut throughout the pandemic in terms of their ability to manage supply chain. They've reached $100 billion. And by the way, all the supply chain, again, it comes back to demand. It comes back to the fact that demand was heightened, and all these companies are growing. I mean, they're growing. So it wasn't like we ever really saw demand stifled in such supply in such a way that we didn't grow. These companies all grew, Pat. Here was what I really liked. I liked seeing growth in the infrastructure business. This was the part that I really liked, because over the past couple of quarters, that's been slow. The PC business sort of carried the torch for a number of quarters. And so the overall number was good. The top number was good. The client number was good. But the ISG number was like, oh, what's going on over there? And, I think in the beginning of COVID, it was like, well, people aren't doing on-prem. They were doing cloud. And so part of Dell's business, things like storage, slowed down. I like some of the partnerships, though, like what we're seeing with Project Alpine, the integrations to multi-cloud, being able to connect to Snowflake. I think that's going to help the storage business continue to gain. There's competition in that space, but Dell's always been able to stay on top there. So that was good. The server growth was good. Revenue growth. And by the way, just flipping back, now is when the PC business is supposed to be capitulating. And even I've been the one saying, like, cycles are going to slow. Companies are going to slow down their purchasing on PCs. Individuals and consumers aren't going to be buying. There's no stimulus. And by the way, these are all obvious economic things that are happening. But again, this is where the cream rises. When an individual company is performing extremely well, marketing well, selling well, building well. And Pat, one last thing I'll just say on this: the backlog didn't depreciate very much either. So the backlog is still significant, and actually, I believe it's as large or not, if not larger, than it was that last. It's as large as it was last quarter, which I think a lot of people are wondering if big numbers got hit because people are draining the backlog. And in this case, Dell's backlog is still pretty big. So you hit a lot, I hit a lot. Congratulations to Dell. I'm just glad to see companies, despite the fact that there is a looming recession, there is pullbacks in the market, good companies continue to perform well. This is a lesson in economics, and this is an MBA in strategy. Run your business well, and the macro environment will impact you less than everybody else. So, hey, we're going to hit the last topic, Pat. This is a big one. I know, it's by the way, everybody, we're recording this on the weekend because we love you. This is because we love you. And we're putting it out in the beginning of the week because we also love when you watch this. And we know you're probably not sitting home on Saturday at 8 p.m., 6 p.m., whatever time it is where you are. But we love you so much that we want to make sure that you don't miss out on our insights this week. So let's go on to the final topic here, which is the big Broadcom making a $61 billion bet on VMware. You and I both made the media ring circus this week. CNBC, Wall Street Journal, Reuters, Yahoo. I feel like I talked to everybody on the planet about this deal this week. First and foremost, this kind of went very quickly. I think Sunday night last week, about a week ago, it broke. Generally speaking, when these Bloomberg and Wall Street Journal stories break, it means they're serious. Now, Broadcom has made some software acquisitions over the last few years. They acquired CA. The company acquired Symantec, tried to acquire Qualcomm, and that's not really software. I mean, yes, some of it is. And they also tried to acquire SAS. But here's kind of what I'm seeing going on here. This is a perfect example of financial brilliance meeting a opportunity to achieve a goal for the street. If you talk to the technology part of the industry, nobody likes this deal. Nobody from a technology standpoint wants to see VMware under the thumb of Broadcom. Now, I sometimes think Broadcom is disproportionately picked on because it does have extremely shrewd practices as it comes to acquiring companies, stripping out OpEx, running them very profitably, kind of debranding them, and changing kind of the whole trajectory of innovation that come from companies. Having said that, this deal is looking like it might shape up a little bit differently. And, as we've already heard, I think Hock Tan has been long looking. The number was 50%. He's been long looking to try to find an acquisition that takes him to 50% distribution between the chip business and software. I think he knows the cloud is an important place to participate. There are some interesting opportunities from a disaggregation in the network side and VMware and the software and how they might be able to, potentially build something like an AWS Nitro that they could then, commercialize through that, having this entire stack of solutions that it could offer. Having said that, at the same time, they announced that VMware is going to be the brand. So they're going to actually take the entire software portfolio and use VMware's brand, which is a very much a 180 from the acquisition strategy that Hock Tan and Broadcom has used in their software acquisitions so far. By the way, buddy, you look good. You look good on that TV spot.
Yeah, I'm just gonna let myself run. We can just
you're just gonna run with that one for a while. But
6 minutes, buddy.
Yeah, you crushed it. I did the CNBC International. I actually hit it on Sunday night before it broke, even in the United States. I'm pretty proud of that. But
nice.
I'll kind of finish this because there's a lot to talk about here, but there's just a lot of questions. I think in terms of the business, VMware is at sort of an impasse because it's been a critical software for companies that are currently heavily dependent on virtualization and on-prem and moving workloads to the cloud. But with things like Red Hat, with EKS from AWS, with Azure Stack, we're seeing Anthos. We're seeing more and more companies coming out with solutions to address containers, or there's more and more solutions to address running apps on bare metal. You're seeing more developer apps or developer tools being built to enable, we talked about it with Microsoft, being able to build for multiple operating systems. Now, we were talking more about doing it on, your client, but it's also being done as well for server. And so VMware isn't the juggernaut it maybe once was. And so the big question is, can the innovation continue? Things like Tanzu that are going to be required to make VMware relevant as virtualization to multi-cloud continues to advance into the future. And by the way, I think we've already heard their business model is going to change almost instantaneously to a subscription model. So we're out the gate. We know that there's a plan to sort of shift, change, and come more consumption and cloud-like from VMware, which I'm not sure how that's going to be met from a lot of companies that have spent a lot on licensing. But if we learned anything from Microsoft, that pivot in the long run tends to work out.
Gosh, where do I start? First off, the passion around this one is so surprising. And I think this shows what an icon that VMware is. I got to know VMware back in the early 2000s. Essentially, the company ended up being the split in the winner of virtualization, right? There used to be a day that you could not run multiple applications on the same server. And VMware brought that to the table along with Red Hat and a few other companies. But this very iconic company, this very engineering company comes face to face now with a company that is amazing at financial engineering. And I don't mean that as a knock. I mean, you can take it as you like, but
they've done it once before. I mean, with Michael.
No, they have done it multiple times. Broadcom has. And
I just meant VMware's experienced a financial engineering genius that took the helm of the company when Michael did it.
Yeah. And what I was referring to was primarily Broadcom, which was so first off, Broadcom is kind of like, gosh, using the word parasite is a bad word, but Broadcom didn't even start as Broadcom. Broadcom started off as Avago, and Avago acquired Broadcom and took Broadcom's name, which is crazy because here we go. I hear the plan is to put all software under VMware. So it's kind of like a parasite that comes in, takes on the host, and takes the resources, and it doesn't kill what it acquires, but it takes what it needs. Wall Street frickin' loves this company. What's their market cap? 225 billion, Daniel.
And that's after a pretty significant pullback from the highs.
I mean, Wall Street loves this. And by the way, listen, I am all in on capitalism. I'm all in on making a buck. I almost went into investment banking as my first job. I don't, dislike this, but I'm here to ask the hard questions. Right? I'm an industry analyst and I have to do that. Broadcom's playbook for acquisitions that I've seen in the past is you gut R&D and primarily the research portion of that. You gut OpEx. In fact, you get it to a 1%. You raise prices. And part of the background of what you've seen here is that they try to buy companies that it's hard to switch out of.
Sticky.
Yeah. Broadcom bought a switch company, and it was for the CI and HCI. It was the networking backbone. It tripled prices to OEMs. And I've talked to multiple product leaders where it went in and did that. But what they do from the executives is they make it very sticky for the executives, meaning you hit these objectives and I will make you rich. On the other hand, you pull back research and you only focus on development, you start to have some issues. I think a good example is what happened with Wi-Fi. Broadcom was the Wi-Fi machine, and then it cut back on its investments in R&D in that space. And who invented mesh Wi-Fi? It wasn't Broadcom. It was Qualcomm. And Qualcomm went in there and basically stole a ton of market share away from Broadcom, right? Because they were asleep at the wheel. They didn't want to invest in that. I think that's a really good example here. So my expectation is that I guess what was the commitment that Broadcom made? They were going to triple EBITDA in 3 years or double it. Let's just assume
8.5 billion in EBITDA in 3 years or something.
Yeah, let's just assume for numbers it's doubling. Daniel, to double EBITDA in 2 years without radically doing something different, I'm sorry, you're not a genius enough to be able to do that the prior management couldn't do that. What are you going to do? You can do one of two things. You raise prices and or you lay off a ton of people. So again, not weighing in, just not putting, what's the right word? Putting my editorialism on it. I'm just saying what I think is going to happen. I don't have skin in the game. I don't own VMware. I don't own Broadcom. I'm just here.
You don't own any of these companies.
I'm just giving you ideas of what there is to come.
Well, and just a quick boomerang, because this is the big topic of the week. Look, we're at a pretty interesting market point where I think you can sell that to the market. Hey, I'm going to, you see a bunch of companies, like you mentioned NVIDIA, making comments about freezing hiring. I mean, the street wants to hear this stuff right now. We're in this, a year ago it was grow, spend, grow, and now we're at cash is king, cash flow. We don't want to see adjusted EPS. We want to see real earnings. We want to see how much cash your business is creating. And Hock-Tan is really good at making a business create cash. What you mentioned, cutting people, Pat, and it's going to be R&D. It's going to be cut out of the innovation. So the question is, again, to keep up with this multi-cloud journey that everyone's on, is VMware far enough along with its current software solution to be able to compete with what's going to come from the hyperscale cloud providers, what's going to come from other software providers that aren't going to cut back severely or at all on investment? And that's, I think, a lot of the concern. Like I said, this is a company that's deeply entrenched in the CIO office of almost every big enterprise on the planet that's dealing with on-prem workloads.
Not almost every except for cloud native.
Right. Those are only a very small subset of companies. I mean, that you're talking about companies that maybe started in the last 10 years. I mean, everything else has big legacy, primal on-prem deployments that need a lot of modernization.
If you're Bank of America, you probably have 5,000 applications sitting on VMware, okay? It is not a trivial task to even move those to Red Hat or KVM. You want to refactor those and put them in a container? Even more. You don't even have the resources to do it. So what are you going to do when they raise your prices?
You're going to pay.
You're going to pay.
So what I'm saying is, as a technology pundits or analysts or whatever we like to call ourselves, it's pretty easy to look at this and say, God, this, ugh. And, but as a financial person reading the markets, you're like, God, this guy's sharp.
And you know what?
By the way, Michael Dell signed it off on it. I mean, he said if the board supports it, he's going to support it. And he owns 40% of this thing.
Yeah.
And to my point is, by the way, what a great face-off, man. Getting those two in a room together, just two absolute financial wizards.
Yeah, totally. You know what? And I'm going to boomerang again. You know what kind of annoyed me is people trying to convince me there was some big tech strategy behind this. That's just a bunch of BS. Listen, I know Broadcom better than anybody out there. I know how they operate, I know how they think. Don't try to convince me there's some grand tech strategy out there. Now, on the whole IPU, NPU thing, you might have a point, right? Because they're rock stars in networking, but also understand that VMware has started with their software stack for offloading networking.
Oh, it's going to take time. And like I said, they're going to have to pour some dollars in. You can't cut all your engineering and build that. But I'm just saying the IP might be there for it. And the possibility is there. And he is apparently trying something. Well, I guess as you said, it's not different in terms of things he's done in terms of rebranding, but it's different than what he's done so far with the software business.
Yeah.
But I think it's an opportunity. It's timing. It's a discount on a great asset that's sticky, got good cash flow, good EBITDA. It really meets the mark there. The long-term innovation, I think, you and I are going to have to come back in a year and do a what happened to VMware. And then I guess time will tell. So I don't think we 100% agree, but I think we're pretty much in alignment here that financially this thing's brilliant. From a technology standpoint, there are as many, if not more, question marks than anything else out there. But made for great theater this week, Pat. Made for a lot of social, a lot of media, a lot of press, a lot of interviews, and for a great segment here on this show. But dude, buddy, It's late. It's a Saturday night. It's time to call it quits. For you, if you're listening, it might be Tuesday or Wednesday, but we do appreciate you. I think I said something at the beginning, but if you didn't hear me, there's a little summit. It's a huge summit, 70 plus speakers, June 7 and 9, going to be kicked off by Arvind Krishna, CEO at IBM. We've got CEOs from Ericsson, Marvell, and Honeywell doing our day openers. And we got a dozen plus more CEOs and 50 plus top executives, lieutenants, generals, leaders of the some of the biggest and most exciting names in tech. And we're going wide. We're covering from traditional data center and 5G all the way out to things like metaverse and sustainability. And so it's going to be a heck of a show. We really hope you'll sign up. Check out the65summit.com. It's free to you. It's free to tune in. Last year, we had over 2 million people watch these episodes or these segments or these sessions. And Pat and I have worked our butts off. So if you like what you're hearing here, join us over there. We do appreciate every one of you that listens and tunes in every week. We made the 6.5 the success that it is. But I'm going to say goodbye for now. Thanks for tuning in. Have a great week.